is China's trade tensions on Australia's exports. The data's come in and it shows just a 4% fall in the last 12 months. Now, Australia has actually recorded its second highest ever level of goods exported to China in 2020. And that's in spite of the tariff war. So for more, Peter Switzer is joining me. He's the founder of the investment newsletter, The Switzer Report. Peter, this is incredible figures because of the attack on our barley, our wine, our coal, even our rock lobster industry. Should we be heartened by what we see today?
Yeah, look, I think you're right, Cory. The thing is this is a 12-month number. And so the first half is going to be better than the second half. But even when you look at the most recent numbers coming out of Newcastle and the coal exports to worldwide, they're only down 3 or 4%. And so what we're seeing is, I think the China battle with us involving Treasury wine estates, lobsters and barley and all those sorts of peripheral exports is really a political battle with the Morrison government, as opposed to a real economic one. And so when you look at the really big exports to China, namely coal and iron ore, they're not really being badly affected. Coal's finding other contracts. For example, India's buying more. But iron ore is not only is critically important to what China's trying to achieve, but the iron ore price has gone through the roof. And so as a consequence, the punishment is more in the headlines in the newspapers as opposed to the real economic bottom line to the country. Some individual companies like Treasury Wine Estates will be feeling it, and other wine producers and the suppliers of lobsters. But as a country, China's not really getting to us big time with their export bans.
Yeah, I suspect, though, it's because, as you mentioned, the iron ore price is very high and China doesn't have a credible high value supplier of iron ore as an alternative. And so that masks the true economic pain in those industries we talked about, which have been devastated. I just know the South Australian crayfishing industry, for example, it's worth over $1 billion a year or thereabouts, and it's grinding to a halt. We're seeing it with barley as well. The wine industry, as you said, Treasury Wine Estates, but they might be good for Australian wine consumers, but it's not good for the companies and for employment.
Oh, no, exactly right. And as I say, the individual companies and the individual sectors are struggling. Wine exporters to China really finding it very difficult. And they're hopefully going to look around for other markets, but it doesn't happen overnight. But the actual total economic impact on the economy and the job creation and all those sorts of things isn't as bad for two reasons. One is the prices of our commodities, both coal and iron ore, going through the roof. We saw in some articles, in fact, an article I wrote today, Dr. Copper prices going up at staggering levels. And that's because the outlook for the global economy is improving by the day, despite the terrible coronavirus statistics in Europe and the USA. The belief is that vaccinations over the course of 2021 and the amount of stimulus that's been thrown at economies right around the world, Cory, is going to lead to 2021 being a year that's going to be a really big boom year. And it's been reflected in commodity prices. They're in a sense, the canary in the coal mine, telling you that things are heading in the right direction. And so as an economy nationally, we're doing okay despite the China threats. But you're right, individual industries and businesses are really feeling it hard.
Hey, but Peter, if you thought 2020 was a stimulus year, you ain't seen nothing yet. Did you see Joe Biden today unveiled a $1.9 trillion stimulus package aimed at combating, the pandemic and the subsequent economic crisis? He said there's no time to waste, but that was kind of like a tacit admission that he's rushed this. Is this spending targeted well? It's an awful lot of money.
No, it couldn't be targeted well. It is basically throw as much money as they can, and an economy that could suffer. Look, you've seen what the S&P 500 index has been doing. It's been defying these terrible coronavirus statistics where the death rates are really unbelievably high in the US in particular. And yet the stock market keeps rising. Now, I did a survey looking at Bloomberg, so Bloomberg did a survey, and I did analysis of all the companies that they looked at, Cory. And we're talking some of the biggest names in the world: Goldman Sachs, BT, Bank of America. And all of them, to a man and woman, said that this year for the stock market is going to be extraordinarily high. And that's because of the kind of stimulus they were expecting from Joe Biden, which you've actually specified just then. $1.9 trillion, much more than would have been spent under the Republicans, but we always knew the Democrats would do that. Now, ordinarily, I'm very much a dry when it comes to economic spending by governments, but we know that governments actually created this national disaster recession. Well, to be truthful, it started in China and their preference for eating raw snake with back droppings. But that led to an extraordinary virus, which then governments of the world closed down economies, created a natural disaster. A recession then followed, and then what's happened then is all governments are now spending an enormous amount of money. The end result's going to be 2021 is going to be an extraordinary boom. It'll roll into 2022, but I think then we'll start seeing inflation happening. Interest rates will be forced to go up, despite the fact that Reserve Bank has said we're not touching interest rates for 3 years. And that's when I think some challenges will happen for stock markets and economies. But I think we're going to see 2 or 3 years of what you might call a rerun of the roaring 20s of the 1920s.
And we know how the roaring 20s ended. It was the 1929 stock market crash and the depression, actually, I think. I get this sense that we are now living through what I think it was Ben Bernanke, the Federal Reserve chairman, said he could throw helicopter money out. And that means you're just throwing it from the skies. Where it will land, nobody knows, but that's the thing that will keep the economy going. Is that a reasonable analogy of where we're at?
Yeah, without a doubt. And Bernanke, has been associated with, Barack Obama, the Democrat period, and they had to sort of pick up the pieces of the GFC and helicopter money. In fact, Bernanke was actually an academic expert on the Great Depression. His doctorate was actually on the Great Depression. And so the policies that actually work. Now, those policies work in the short term. They will stimulate the economy. But what has to happen after that is the governments have to have the guts to start pulling in their budget deficits and hoping that the private sector takes over. And so, without a doubt, what we're seeing now is helicopter money thrown at a problem that could become another Great Depression if it wasn't actually done, Cory. But the bottom line is, and we saw this in Australia, the Labor Party followed basically the advice of Ken Henry. They threw money at the problem, but because of all their internal fighting, they never ever embraced fiscal responsibility in the latter years after the GFC. Hence the problems with the budget deficit that followed the GFC. And we are basically, in many ways, we have to hope the governments have the guts to become fiscally responsible once they get the world economy going again. And I think it will go next 2 years. But what happens after that is going to be the critical issue about whether another serious recession follows.
Yeah, the problem with kicking the can down the road is that you eventually run out of road.